This is my bus portfolio cheat sheet on my website, Best of Us Investors. And if you join and become a gold member, this is what you'll come to. And what I want to share with you is some of the best work I think I have done in my career as a financial advisor. And that is to share with you how you can anticipate what a stock is going to be worth in the future if you can gain access to the data. And so this here is my cheat sheet. It gives you all the financial information you need to make a good decision about any of the 60 stocks that I follow. But what I've done most recently, I think that is the best work I've done, is my deep dive into Kerry's 3-year stock projection, price projection. And what I want to do in here is give you a deep dive into it. What I've done is explained this to my AI agent in written copy. And then I said, now you explain it in your words to my viewers as to how this works and how it might help them. So what I'm going to do is I'm going to go up here, and this is what I'm going to suggest you do. You click on that. That's going to take you to a black screen, and then it's going to pop up, and it's going to give you access to a podcast.
All right, so today, we're really going to get our hands dirty.
Yeah.
We're doing a deep dive into Kerry's stock analysis spreadsheet.
Oh, yeah. This one is impressive.
It is. And, you know, everyone's talking about AI stocks right now.
Right.
And it can be tough to know, like, where do you even begin to figure out if a stock is a good deal?
For sure.
Well, Kerry's put together this spreadsheet, and it's specifically designed to help us figure out, you know, what are the AI stocks that are actually worth our attention.
Yeah, definitely cuts through some of that hype.
It does. And one of the things that I really appreciate about it is it's not just about, you know, what's the company's size or how popular is it.
Mm-hmm.
It really digs down into like the nitty gritty of, you know, how is this company actually growing?
Yeah.
And is the stock price like reflecting that growth?
Exactly. And he starts with something really basic, like a really good foundation, something called earnings per share.
Oh, EPS.
EPS, exactly.
Right.
And essentially, it's a measure of a company's profitability.
Yeah.
Like, you know, you think of it this way, like each share of stock, you know, represents a tiny little piece of that company.
Right.
And EPS tells you how much profit each share is entitled to.
Okay.
So it's kind of like, you know, the foundation for understanding a company's financial health.
Okay, so that makes sense. So we have this EPS, but how do we use that to actually figure out, you know, if a stock is a good deal?
Right.
Because I see there's something called a PE ratio in here as well.
Yeah, PE ratio, so that's price to earnings, and that basically tells you how much investors are willing to pay for each dollar of those earnings.
Okay.
So a high PE ratio, it can be a good thing.
Okay.
It could mean that investors are really optimistic about future growth.
Right.
But it doesn't always tell the whole story. Like, it could also mean that maybe, you know, the stock is getting a little bit ahead of itself. Maybe it's overpriced.
Yeah, overpriced. Okay.
And so that's where the PEG ratio comes in,
Oh, yeah.
because it brings in that element of growth into the equation.
Okay. I'm seeing PEG ratio all over this spreadsheet.
Right. It's kind of a key piece of the puzzle here.
Yeah.
So PEG stands for price earnings to growth.
Right.
So it's basically helping us assess, like, is the price justified based on how fast the company is actually growing?
Right.
So if the PEG ratio is kind of like around 1.5, that generally indicates that, you know, the stock is maybe fairly valued.
Okay.
But if it's significantly higher, like above 2, even if the company's growing really well, it might be like a little bit of a red flag.
Okay. So a high PE ratio doesn't always mean overvalued.
Right.
But the PEG ratio kind of helps us dig a little deeper.
Exactly. Like, is the excitement, is it warranted?
Yeah. Okay.
And on the flip side, a low PEG ratio, like below 1, could be a sign that maybe the stock is actually underpriced
Interesting.
relative to its growth potential. So it's like those hidden gems that maybe the market hasn't fully recognized yet.
Ooh, I like that. Okay, so we've got this way to kind of assess, like, you know, the current value of a company.
Mm-hmm.
But then Kerry takes it a step further.
Yeah. And has like these price projections all the way out to 2027.
He's looking ahead.
Is this like time travel? Like, how is he doing this? Well, not quite time travel, but he's using a really kind of clever method to, like, estimate where stock prices might be in a few years.
Okay.
And he's doing it based on a few things. So he's looking at projected EPS growth.
Okay, so like how much are their earnings per share expected to grow?
Exactly.
Okay.
And then he's also looking at the historical average PE ratio for the S&P 500.
Okay. Why the S&P 500?
Yeah, so the S&P 500 is like a widely recognized index, tracks like 500 of the largest U.S. companies, and it's often used as like a gauge for overall market performance.
Right.
So by using his historical average PE, he's kind of bringing in like a dose of reality. You know, it's grounding those projections in real market data, so it's a bit more conservative.
Okay.
And arguably like a more reliable approach than just kind of like, you know, relying solely on like, oh, what if this happens?
So instead of trying to predict, like the unpredictable,
Right.
he's using historical trends
Exactly.
to give us a more realistic outlook.
Yeah.
Okay, I like that. So this is where I think it gets really interesting for me.
Okay.
Because he's got this whole section dedicated to like determining whether a stock is over or underpriced in 2027.
Yeah.
Like it feels like we're getting a sneak peek into the future.
Right. So what he's doing is he's taking that projected stock price for 2027
Okay.
and he's adjusting that PEG ratio to 1. So he's basically saying, okay, if this stock were fairly valued based on its projected growth, what should it be priced at?
Oh, okay.
And so that gives us a target to compare against.
So it's not just about what this stock is currently trading at.
Right.
It's about like what could it be worth
Exactly.
if the market like really recognized its potential.
Okay. It's helping us pinpoint the stocks that might be like flying under the radar a little bit.
Okay.
You know, companies that have really strong growth prospects, but maybe the market hasn't fully caught up yet.
Interesting. And he even takes it like a step further and calculates like a fair price target for today. This is like, now we're getting some real like actionable insights.
This is where the rubber meets the road. So he's basically adjusting that PEG ratio to 1 for today's prices.
Okay.
And that gives us like a target buy-in price.
Right.
So if the stock is currently trading below that target, that could be a signal that it's undervalued.
They go.
It might be a good buying opportunity.
I love how this is like giving us both like a long-term perspective, but also like a very practical tool.
Right.
For making decisions now.
Right. It's about understanding those fundamentals and then, okay, how do we take action?
Okay. But with all these numbers and all these calculations, you know, it can be tough to keep track of which stocks are like really standing out.
Right.
And that's where I see this ranking system coming in.
Yes, exactly. So instead of getting lost in the weeds of all the individual numbers, he's created this ranking system, kind of helps us prioritize.
Yeah.
And it ranks stocks from like best to worst based on those over-under pricing calculations for 2027.
Okay.
And there's even a summary column
Nice.
that kind of highlights those stocks that are consistently ranking high.
So we're not just looking for like a one-hit wonder.
Right, exactly.
We're looking for like the companies that are showing that consistent strength across, you know, multiple factors.
Exactly. It suggests that the company isn't just, you know, benefiting from maybe a temporary trend, but that it has like a solid foundation and a sustainable growth trajectory.
This is amazing.
Right.
Okay, but before we get too excited about all of our, you know, potential AI stock picks, I think we need to dive a little deeper into the specific companies
Of course.
that are included in this spreadsheet.
Yeah, absolutely. Like understanding each company and how it fits into that larger AI and semiconductor ecosystem, that's critical.
Okay.
And that's where I think the AI-powered deep dives come into play.
Wait, AI-powered deep dives?
Yeah.
This is like next level.
I know, right?
What are we talking?
So basically, these are AI-driven podcasts
Okay.
that provide like really comprehensive overviews of each company.
So instead of just crunching numbers, like we're getting like real insight into what these companies actually do.
Exactly. Like how do they fit into the big picture?
And how they're contributing to like the advancement of AI. Okay, I'm all ears. Tell me more.
All right. So these AI-powered deep dives, they pull from all the latest news and analysis that's available online.
Oh, okay.
So it's like, imagine having like a team of researchers constantly like updating you on, you know, all the most relevant information for each of these companies.
Oh, okay. That's definitely better than me like trying to go through all of that myself. So we've got like this, you know, amazing spreadsheet that helps us identify, you know, potential opportunities, but then these deep dives add like another layer to it.
Exactly. It's like the context you need to like make truly informed decisions. It's not just about like the financial projections, but understanding like a company's technology, its competitive landscape, the management team, all those factors that contribute to their long-term success.
It sounds like Kerry's like thought of everything.
He's done a pretty good job.
This is like the one-stop shop for like anyone who's serious about, really understanding and investing in like the future of AI.
It really speaks to like that power of combining data-driven analysis with like those in-depth qualitative insights. It's a pretty comprehensive and insightful approach.
It's easy to get caught up, I think, in the hype surrounding AI.
Right.
But I'm like really appreciating how Kerry's approach is like grounded in this solid framework.
Mm-hmm. It's not about chasing the latest trends. It's about making those strategic decisions based on that thorough understanding of the fundamentals.
Yeah.
I mean, that's where the true value lies.
Okay. I'm feeling like a lot more confident about like navigating this whole world now.
Yeah.
But before we go, like full on AI investor,
Yeah.
what are like some of the risks that we need to consider?
That's a great question. I mean, because obviously, like no spreadsheet can perfectly predict the future.
Right.
Every investment, it carries some level of risk.
Mm-hmm.
And the AI landscape, I mean, particularly, it's rapidly evolving.
Right.
Things can change quickly. New technologies emerge, competition heats up, market dynamics shift.
Right.
So it's really crucial to like stay informed and be prepared to adapt.
So it's not just like set it and forget it.
Definitely not. It's that continuous learning, the monitoring, it's essential. Even with a robust framework like Kerry has put together, due diligence is key. Like don't blindly rely on any single tool or analysis. Do your research, stay updated on industry trends, make sure, your investments align with your own personal like risk tolerance and your financial goals.
That's a really good point.
Yeah.
Because it's easy to get excited, but investing it's a long game.
Mm-hmm. Patience and a level head, those are really important.
Right. So we've covered a lot of ground. This spreadsheet is really impressive. Those AI deep dives, they add a whole other dimension. Like what stands out to you most about Kerry's approach?
For me, it's that combination of quantitative and qualitative analysis.
Mm-hmm.
The spreadsheet provides that solid framework. The data points give us that clear picture of a company's, financial health, the growth potential. And then the AI deep dives add that nuanced understanding of the company's place in the broader AI ecosystem.
Yeah. It's like having the roadmap and a guide all in one.
Yeah. Yeah. I like that.
I'm curious though, if our listeners could take away just one like key insight
Mm-hmm.
from this whole deep dive, what would you want it to be?
I would say this. Investing, it's a journey. It's not a destination.
Yeah.
It's about that continuous learning, adapting to those changing market conditions and making, informed decisions that align with your individual goals. So this spreadsheet, it's a valuable tool, but it's only as good as the investor who uses it.
That's a really good way to put it.
Yeah.
Yeah. So to our listeners out there, I encourage you, like, explore this spreadsheet,
Mm-hmm.
play around with the data, listen to those AI deep dives.
Yeah.
And most importantly, think critically about like how you can apply these insights to your own investment journey.
Right. The world of investing is constantly evolving.
Right.
So stay curious, stay informed, and never stop learning.
Okay. Before we wrap things up,
Yeah.
I have one final question for you.
Okay.
And for our listeners to kind of ponder as well.
All right.
So as we've, delved into this spreadsheet, explored these different metrics, what surprised you the most? And how might you apply this approach to like your own investment research?
What surprised me is how interconnected like all these seemingly separate metrics are, EPS, PE ratio, PEG ratio. Like they all tell a story when you consider them together. And while, the spreadsheet is focused on AI stocks, the principles behind it, I think, understanding a company's growth trajectory, evaluating its current valuation, considering those quantitative and qualitative factors. I mean, you can apply that to any sector.
That's a really good point. Like,
Yeah.
This is not just about, AI stocks. This is about like equipping ourselves with like a framework
Exactly.
for making smarter decisions like across the board. It's about understanding the fundamentals, doing your research, and making choices that align with your long-term goals.
Right. And it's also a good reminder that investing isn't just about the numbers. It's about understanding the stories behind those numbers.
Well said. All right. Well, thanks for joining us on this incredible deep dive into Kerry's stock analysis spreadsheet. We'll see you next time for another, adventure in knowledge exploration.
Yeah. And, it really is about, like empowering ourselves, to really understand this stuff and not feel intimidated by it,
Exactly.
Because sometimes it can feel like, oh my gosh, there's like so much to learn.
It's a whole world out there.
It is. But, once you have, a framework, it's like you said, these principles can apply to any sector.
Yeah.
So it's not just, I've got to go learn about AI. It's like, no, these are fundamental things about evaluating a business.
Exactly.
And understanding, is this a good investment for me or not? Yeah. And, I think it's encouraging to realize that you don't need to be like a financial expert to start. Like you can start learning these principles and you can start applying them. And the more you learn, the more confident you become.
Exactly. And I think, one of the things that I've really appreciated about this deep dive, is seeing how, Kerry has put this all together. Because it's one thing to, read about these concepts, in a textbook or something.
Right.
But to actually see them like in action.
Yeah.
In a spreadsheet.
Yeah.
Where it's like, oh, okay, here's the data, here's the calculations. It makes it a lot more tangible.
Definitely. It's like it takes it from the abstract to the practical.
Exactly. And I think that's, one of the biggest hurdles for a lot of people is like, oh, this all sounds great in theory, but like, how do I actually do it?
Right.
And I think Kerry's spreadsheet really kind of, bridges that gap.
It gives you that starting point.
It does, yeah.
And then you can build from there.
So to our listeners out there, I would say, if you're even remotely curious about investing in AI or just investing in general, go grab Kerry's spreadsheet.
Yeah.
It's it's a fantastic resource and just start playing around with it.
Yeah, see what you discover.
Yeah, because you never know. You might uncover some hidden gems.
Or you might just gain a whole new understanding of how to evaluate companies.
Right, and that's valuable in itself.
Absolutely.
So thank you for joining us on this deep dive.
It's been a pleasure.
It's been a fascinating conversation, and I feel like we've learned so much.
I agree.
And we hope you have too. So until next time.
Yeah.
Happy investing, everyone.
That was Brad and Samantha, my AI agents, and I think they did a fantastic job of explaining something that's very difficult. And again, I want to extend my invitation for you to come and take a look at this. I'll make it available to you for free for 14 days as a part of our 14-day free trial. And you see if this can help you make some good investment decisions. There are some stocks on here that are flying under the radar that Wall Street hasn't woken up to yet because they're not big traders. They don't trade a lot of shares on a daily basis, but they're the ones who are going to give you the exponential growth as we build out the infrastructure of AI. After the infrastructure is built out, the numbers are going to change. And that's going to be the big growers and continual growers are going to be those companies on this sheet who are going to deliver AI to you over the next 20 years. So I hope that helps you. I hope that helps explain how you can become a better investor and how you can join our community. We call it a tribe of Best of Us investors. I'll talk to you more about this in the future. In the meantime, let's go to the website, Best of Us Investors, take advantage of the free trial and see if you can't become one of the best investors and become a millionaire. Why not? It's all about understanding the numbers.